Hello everyone, welcome to Tesla Daily News. Today is June 17th, Wednesday, and the following is the latest Tesla news. According to recent market data, Tesla shares finished the session at about $396.38, down from the previous close around $404.66. The stock opened near $401.53, traded as high as roughly $405.94, and as low as about $393.76. On volume close to 43.4 million shares. Technically speaking, this looks like a red day inside a broader uptrend, with a modest pullback from resistance after testing the $400 zone. Short 10-word take for traders, minor pullback from resistance, trend still intact, watch 400. For investors, the key point is that Tesla continues to trade in a high volatility band where macro sentiment, artificial intelligence hype, and Musk-related news can easily move the stock several percent in a single day. According to Gulf News, the headline story around Elon Musk this week is not just Tesla, but the extraordinary surge in SpaceX following its initial public offering. SpaceX shares have jumped roughly a third in just 3 sessions, closing near $201.80 and valuing the company at about $2.64 trillion. That puts SpaceX briefly ahead of Amazon during intraday trading and even temporarily above Microsoft, leaving it among the most valuable companies on the planet. The article highlights that this valuation is fueled partly by the record-breaking $85.7 billion capital raise at the IPO, and partly by intense retail enthusiasm for the company's role in space launch, global satellite communications, and now artificial intelligence infrastructure. Gulf News mentions that a major driver of this enthusiasm is SpaceX's acquisition of Cursor, a San Francisco-based artificial intelligence coding startup, in an all-stock deal worth around $60 billion. Cursor focuses on AI-assisted software development, including so-called vibe coding, where users build applications with AI-generated code. SpaceX has also folded Musk's xAI into its orbit, integrated social platform X, and announced massive investments in AI chip fabrication and data centers. These moves position SpaceX at the intersection of space, connectivity, and compute. But the article also quotes portfolio managers who describe the current valuation as bubblicious and driven by euphoria, warning that IPOs often experience significant drawdowns once more shares hit the market and fundamentals start to matter. For Tesla shareholders, this matters in several ways. First, the dramatic re-rating of SpaceX wealth has pushed Musk's net worth well beyond the trillion-dollar mark, increasing his financial flexibility and reinforcing his image as a visionary builder of integrated technology empires. Second, it raises the question of capital allocation and focus. With SpaceX seen as the hotter artificial intelligence infrastructure play, some investors may worry that Tesla could be comparatively de-emphasized in Musk's attention and resource planning, especially in overlapping areas like robotics, compute, and autonomous systems. According to Canaltech in Brazil, the Bloomberg Billionaires Index now estimates Elon Musk's net worth at around $1.27 trillion, making him the first person in modern history to cross the trillion threshold and placing him almost $1 trillion ahead of the second richest person, Larry Page. Canaltech notes that Musk owns about 42% of SpaceX and roughly 12.8% of Tesla. The article stresses that this net worth is tied mainly to stock prices rather than cash or distributed profits, meaning daily market swings can add or subtract hundreds of billions on paper. For perspective, the gap between Musk and Page alone would be enough to place either of them at the top of the rich list if it belonged to a separate individual. From a Tesla investor perspective, this concentration of wealth is a double-edged sword. On the positive side, Musk's enormous equity position aligns his incentives with long-term equity holders of both Tesla and SpaceX. As long as markets believe in his vision for electric vehicles, autonomous driving, space, and AI, he has compelling reasons to push each platform forward. On the risk side, his personal wealth and influence have become systemically important. Sharp reversals in sentiment around Musk or his companies could not only hurt Tesla's share price, but also destabilize financing conditions and investor confidence, because so much of his empire is anchored in high expectations. According to El Español, analyst and Professor Enrique Don argues that SpaceX's IPO should not be understood merely as a gigantic financial event, but as a profound bet on the power of Musk himself. The piece notes that investors are no longer valuing SpaceX primarily for rockets or even for Starlink. Instead, the true narrative revolves around SpaceX becoming a foundational layer of future AI and communications infrastructure. That includes ideas like orbital data centers powered by near-unlimited solar energy, deeply integrated satellite networks, and on-demand compute connected to Earth through Starlink. El Español mentions that SpaceX still depends heavily on the long-term success and economics of its Starship rocket, a program that has not yet fully proven its operational or financial viability. Many of the revenue streams used to justify the massive valuation are either early stage or still hypothetical. Yet markets seem less concerned with present profits and more focused on Musk's track record of turning improbable visions into operational businesses. The article highlights that Musk now controls an extraordinary cluster of strategic assets: Tesla in electric mobility and robotics, SpaceX and Starlink in launch and satellite connectivity, X in global information flows, and XI in advanced models. This concentration raises pointed questions for Tesla investors. On one hand, Tesla benefits from being deeply embedded in this ecosystem. AI breakthroughs at XI, launch and satellite capabilities at SpaceX, and compute infrastructure projects could all cross-pollinate Tesla's autonomous driving, robotics, and energy businesses. On the other hand, El Español warns about the unprecedented concentration of technological and political power in a single individual whose recent public behavior has leaned toward more extreme and polarizing positions. The piece suggests that regulators and societies will increasingly debate how much critical infrastructure they are comfortable allowing Musk to control. Any regulatory backlash, antitrust action, or political clash that targets this concentration of power could spill over into Tesla's risk profile, affecting its valuation and growth opportunities. According to Bloomberg Opinion, columnist Liam Denning raises the question of whether Musk should attempt a merger between SpaceX and Tesla. The discussion is framed around potential synergies and, even more importantly, conflicts of interest. On the synergy side, a combined entity would unify electric vehicles, robotics, rockets, satellites, and AI infrastructure under one corporate roof, potentially simplifying resource allocation and strategic coordination across these platforms. It could crystallize the story that investors are already partially pricing in: Musk Inc. as an integrated technological conglomerate. However, Bloomberg mentions that such a merger could create substantial governance and conflict issues. Current Tesla shareholders own a specific slice of an electric vehicle and energy company with a particular risk profile and regulatory environment. SpaceX, by contrast, operates in aerospace, defense-adjacent contracts, telecom-like services, and now AI infrastructure. A merger could blur these boundaries, raising questions about which set of investors subsidizes which parts of the empire, and whether small Tesla shareholders would be forced to shoulder higher risk activities from the space side or AI data center side that they did not originally sign up for. For investors, the mere discussion of a potential merger can have several implications. First, it highlights that Musk and his advisors are thinking in terms of very large-scale structural moves that could reshape how markets value Tesla. Second, it could prompt regulators and credit agencies to look more closely at cross-company dealings and the fairness of any transaction between affiliated entities under Musk's control. Third, just the prospect of a merger can affect Tesla's valuation multiple, either by increasing the perceived optionality of being part of a broader empire, or by triggering a conglomerate discount if investors fear complexity and cross-subsidization. In the near term, there is no concrete evidence of an imminent merger, but the debate adds another layer of strategic uncertainty that shareholders must factor into their long-term thesis. According to NL Times, the Dutch vehicle regulator RDW has rejected claims that Tesla misled authorities about safety data related to its self-driving functions on public roads. A recent Reuters report had suggested that Tesla might have overstated safety performance in its application for approval in the Netherlands. The RDW now states that while it did rely partly on data supplied by Tesla, it also conducted independent testing to arrive at its conclusions and believes the application was not misleading. Since April, Dutch drivers have been allowed to use Tesla's hands-free driver assistance system, provided they remain fully responsible and attentive. NL Times reports that about 40,000 Teslas equipped with these driver assistance features have collectively driven roughly 24 million kilometers on Dutch roads without significant incidents, according to the regulator. The Netherlands is the first country in Europe to roll out this hands-free system at scale, and the RDW is considering applying to the European Commission to extend these capabilities across the European Union. The regulator also notes that Tesla is not unique in offering such systems, citing BMW and Ford products that permit hands-free driving under certain conditions, and asserts that Tesla's system is at least as safe as comparable technologies. For Tesla investors, this development is important on several fronts. It directly addresses a reputational risk raised by investigative reporting, signaling that a key European regulator currently supports Tesla's safety claims. Regulatory backing strengthens Tesla's position as a serious player in the global autonomous driving race and can help pave the way for wider EU deployment, potentially opening a large addressable market for full self-driving subscriptions. At the same time, the scrutiny itself is a reminder that every regional approval is contingent on trust in Tesla's data transparency. Any future clash between Tesla's internal metrics and regulator assessments could lead to delays, restrictions, or negative headlines that weigh on sentiment. According to latestly, a recent real-world incident in the United States has showcased the life-saving potential of Tesla's full self-driving supervised system. A Model Y driver began experiencing severe chest pains while driving and called his son for help. The son, added as an authorized driver through the Tesla app, was reportedly able to remotely reroute the vehicle to the nearest hospital while FSD supervised handled the driving tasks. Emergency room staff were alerted in advance, and doctors later stated that the quick arrival likely saved the driver's life. Latestly explains that Tesla's remote features allow authorized users to monitor the vehicle's location, adjust navigation, and in some cases intervene without being in the car. In this episode, those capabilities, combined with the autonomous driving system, transformed the car into a responsive emergency transport solution. Social media reactions have been overwhelmingly positive, with many commentators seeing this as a glimpse into the future of connected mobility, where vehicles can seamlessly cooperate with families and healthcare providers when crises occur. For Tesla enthusiasts and investors, stories like this are powerful narrative drivers. They move the discussion about FSD beyond dry statistics and regulatory debates into emotionally resonant territory, where autonomy is not only a convenience but a potential lifesaver. Such anecdotes can support consumer adoption, justify premium pricing for FSD packages, and strengthen Tesla's brand as a safety innovator. However, they also implicitly raise expectations. If consumers come to see FSD as an emergency safety net, any high-profile failure or misused scenario could trigger backlash or legal challenges. According to Origo in Hungary, a very different kind of story illustrates the vulnerabilities of current driver monitoring implementations in Tesla's FSD system. The article describes how some Chinese users have found a bizarre yet effective way to fool the in-cabin camera that checks whether the driver is paying attention. By placing a strategically positioned doll's head in front of the camera, these drivers can trick the image recognition algorithm into believing that the driver is watching the road, even if the seat is occupied by someone distracted, or in some online videos, apparently by no one at all if a weight is placed on the seat. Origo mentions that there are already aftermarket gadgets designed for this purpose, selling for relatively small amounts of money. Some vendors are even offering small screens that display animated faces to keep pace with potential improvements in Tesla's detection algorithms. The article argues that this is a significant challenge for any camera-based monitoring approach, because users inclined to circumvent safety systems can creatively adapt to updates faster than regulators or manufacturers might like. For Tesla, this kind of misuse represents a critical risk. FSD Supervised is designed as a driver assistance system that still requires continuous human supervision. If enough users hack around these safeguards, it increases the likelihood of severe accidents that could be blamed on Tesla's technology, regardless of user misconduct. For investors, the takeaway is that the path to full autonomy is not only a matter of improving the driving AI, but also of designing robust human-machine interfaces that can withstand intentional abuse. Tesla may need to combine camera monitoring with other sensors, behavioral analysis, and stricter enforcement to limit gaming of the system. Each negative viral incident involving misused FSD could affect regulatory sentiment and potentially slow down approvals in key markets. According to NL Times and latestly taken together, we see two sides of Tesla's autonomy story emerging at the same time. On the positive side, regulators such as the Dutch RDW are affirming that Tesla has not misled them and that the system is at least as safe as competitors. Real-life cases show FSD potentially saving lives in medical emergencies. On the problematic side, reports like those covered by Origo show that users can still find ways to disable or deceive the safeguards that regulators rely on when they approve these systems. For Tesla shareholders, the long-term value of FSD as a software and subscription business will depend on whether the company can preserve the trust of regulators and the public in the face of both legitimate accidents and reckless user behavior. Zooming back out to Musk's broader empire, Gulf News and El Español together paint a picture of an ecosystem where Tesla is one pillar among several, rather than the sole focus. SpaceX now sits near the top of global market capitalization rankings, with massive investments in AI data centers and chip fabrication, plus acquisitions like Cursor and partnerships like the one with Anthropic for compute capacity. Canaltech underscores the resulting explosion in Musk's personal fortune, which is now dominated by ownership stakes in both SpaceX and Tesla. From an investment strategy point of view, this raises several key questions. First, will investors start to see Tesla more as a stable cash flow and manufacturing platform that supports Musk's riskier, higher upside bets in SpaceX and related AI ventures, or will Tesla continue to be valued as the primary growth engine? Second, if a merger or deeper integration between Tesla and SpaceX were ever pursued, how would that reallocate risks and returns among current stakeholders? Third, as criticism grows about the concentration of technological power in Musk's hands, will regulatory constraints emerge that affect Tesla's ability to tap into shared infrastructure and data flows across the Musk ecosystem? For now, Tesla investors must balance solid operational progress, expanding autonomy capabilities, and strong brand recognition against rising competitive and regulatory pressure, and against the sheer unpredictability of being tied so closely to the fortunes and controversies of a single, very high-profile leader. The Dutch regulator's supportive stance, the dramatic SpaceX IPO, the life-saving FSD story, and the Dulles head hack in 1 week all encapsulate this duality, enormous promise and equally significant risk. That concludes today's Tesla Daily News. Thank you for listening, and please remember to subscribe for future updates.